Today we are going to discuss on the petty cash book, and we should know that which transaction we are supposed to record in the petty cash book. So see here it is clearly mentioned that in petty cash book we will record petty payments. Petty payments means payments of low value, like payments of $10, 20, 30 like that. So in business we make small payments of low value, and such payments are known as what? Petty payments. And such payments and to record such payments we maintain petty cash book. Okay, and a separate person we appoint to maintain the petty cash book, and that person is known as what? Petty cashier. So here see clearly given what is the purpose of petty cash book. Cash book maintained, the definition of petty cash book: cash book maintained to record petty payments in the business. So that cash book will be termed as what? Petty cash book. And petty payments means payments of payments of low value, small amounts you can say. And these are the examples. See examples of petty payments. See postage and stationery, cleaning expenses, traveling expenses, and even whatever if we pay to our suppliers small payments. So such payments will also be recorded in the petty cash book. And as I told you that to maintain petty cash book, or you can say to record petty payments in the petty cash book, we appoint a separate person. Okay, and that separate person will be known as what? Petty cashier. The person who maintains petty cash book is known as what? Petty cashier. And why we are maintaining petty cash book, and why we have appointed a separate person to maintain the petty cash book? Just to minimize the workload of the chief cashier. That is the only purpose. So that chief cashier can pay more attention to the transactions of high value. So understood the meaning of petty cash book? And the person who maintains petty cash book is known as petty cashier. And the purpose of maintaining petty cash book is what? Okay, it means in the business there will be two cashiers, chief cashier and the petty cashier. Chief cashier will pay attention on the transactions of high value, and petty cashier will pay attention on the transactions of low value. He will record only small payments, petty payments. Yeah. So understood the theoretical aspect of the petty cash book. And to maintain petty cash book, we have a system, and that system is known as what? Interest system. Interest system. Now see what we are supposed to do in the interest system. In interest system, what will happen? The chief cashier will give a certain amount to the petty cashier at the beginning date of each month. Suppose in our business, Mr. X is chief cashier. Okay. And Mr. Y is petty cashier. And now see in interest system what will happen? The chief cashier will give a certain amount to the petty cashier. Suppose chief cashier is giving to the petty cashier how much amount? Suppose $500. Now what Mr. Y will do? With the help of this $500, Mr. Y will meet out all the petty payments in the business during that particular month. And at the end of the month, Mr. Y will show the petty cash book, or you can say show the record of all the petty payments to the chief cashier. And after showing the petty, record of petty payments, now again Mr. X will give, some amount to Mr. Y. So this system is known as what? Interest system. Again I am explaining. Suppose in our business, Mr. X is the chief cashier and Mr. Y is the petty cashier. Now what Mr. X did? He gave $500 to Mr. Y at the beginning date of the month. Now after getting this 500, what Mr. Y will do? With the help of this $500, with the help of this $500, Mr. Y will meet out all the petty payments in the business in that particular month. Suppose in the month of January, with the help of this 500, Mr. Y incurred $450 petty payments. The total of the petty payments in the month of January. He got how much amount? $500 in the month of January from Mr. X. Now out of that $500, Mr. X expended how much amount? $450. on petty payments. Now how much amount remained with him? $50. Now see what Mr. Y will do now at the end of the month. He will show the records to Mr. X. Now Mr. X will again give him how much amount? $450. Whatever amount he expended, he will give to Mr. Y again. Now after giving this, what will happen? On the first day of the next month means February, Mr. Y will again have how much amount? Mr. Y will again have how much amount? $500. This system is known as what? Interest system. So now see, I am going to explain you the format of the petty cash book. So see, this is the format of petty cash book. So see, this left hand side is known as what? Debit side. This is debit side. Yeah. And this right hand side is what? Credit side. Yeah, this is debit side, this is credit side. And this is the format of petty cash book. Let's see the column for date, then details, and here I will write a folio number. Then we have total amount received. Okay, this is the debit side. Now see the credit side, date, details, voucher number, total amount paid, and these are the specific column for what? For this petty payments. In all business, there are certain items on which we every day or every week we incur some small payments. There are certain items like we pay cleaning, we pay for cleaning, we pay for stationery, traveling expenses, and ledger accounts means here suppliers. Whatever amount you will pay to the supplier, small payments you will record in this column. And if there is any expenses which is not allowed to be recorded in any one of these four columns, then that small payment will record in this column, sundries. So these are the specific small payments, and if any small payment we made which is not allowed to be recorded in any one of these four columns, then such small payments will record in which column? Sundries. Now see here I have taken some transactions. So see what is there. Record the following transactions in the petty cash book. So see here we have year 2014 and the month is January. Okay. Now see in the month of January, what is the first transaction? We received from chief cashier $500. Suppose I am the petty cashier and I got $500 from the chief cashier. So my petty cash increased. See what happened. My petty cash increased. I am getting the money. So in a business, what happened? Petty cash increased. And another thing is what happened. The cash decreased. The main cash, the cash which is laying with the chief cashier, that decreased, isn't it? The decrease in cash will be credited because both are assets. See, cash is not going out from the business. Remember this, cash is in the business only. But this cash represents the cash laying with the chief cashier. And this cash represents the cash laying with the petty cashier. So chief cashier cash decreased. The cash with chief cashier decreased, isn't it? So decrease in cash means, decrease in asset means credit. And the cash with petty cashier increased. So increase in petty cash, that is also asset, so debit. So in this, so see this is the entry, petty cash debited, isn't it? So that's why on the debit side I will write here cash, the name of the opposite account. See this is the opposite account, isn't it? So petty cash debited, so on the debit side I will write cash. And date I will put here. First I will put the date 2014 and we got the money on January 1st. And I will write the name of the opposite account, cash. And in column for total in this column I will write how much amount we got? $500. So we have recorded this transaction. Now see, after getting this 500, see on January 2nd what happened? Yeah, brought pens and pencils $50. So these are all small payments. Now see, I am going to record all these small payments. Now see, when I will make small payments, my petty cash will increase or decrease. And decrease in petty cash means credit. So it means all small payments will take place, will be recorded on the credit side. So see, first I will write the year 2014 and see on January 2nd. What is the payment? We brought pens and pencils, isn't it? So I will write here pens, the detail of the item we brought, pens and pencils. And how much amount we paid? $50. So $50 I will write in column for total also. And the payment, the pens and pencil will be classified as stationery, isn't it? So $50 I will write here also. So all payments I will write in this column first, all small payments, and then I will write in the specific column, the concerned specific column. Now next date is on which date? January 5th. Paid H Singh, a creditor. H Singh is our supplier. H Singh is a supplier, okay? And we paid him, you know how much? $60. So this is also a small payment. So first I will put the date, January 5th. And we paid to the supplier. Who is the supplier? H Singh. And how much amount we paid? So $60 I will write first in total paid, the column for total paid. Then this 60 I will write in the ledger accounts. The ledger accounts means payment made to the whom? To the suppliers. Small payments made to the suppliers. Now next date is when taxi fare we paid on Jan 10. So I will put the date Jan 10 and I will write here taxi fare. Taxi fare. How much amount I paid? 20. I will write in this column first, and it will come in traveling expense, isn't it? Yeah. So I will write, then I will put $20 in this traveling in column for traveling expenses. Now next transaction, see on January 15. Yeah, the one person is there who is doing this cleaning work. I paid him on this date $30. So first I will put the date January 15 and the cleaning charges. Cleaning charges. How much dollars? $30 I will put here, and this $30 I will put in this column for cleaning. The specific column is there. Next is January 10. Next transaction conducted on January 20. Sorry. Now we paid what? Paid for refreshment. Refreshment means suppose one customer came to my business and I offered him cold drink or any tea, coffee like that. So that is refreshment, and I expended how much amount? $20. So refreshment, and I will write here $20. And see, for refreshment there is no any specific column, isn't it? Yeah, that $20 I will put in column for sundries. Now next transaction conducted on January 25th. Now what happened on that date? Paid R. Ramesh. R. Ramesh is also a creditor. $25 I paid. Okay. Paid to R. Not Ramesh, R. Sharma. See on January 25 paid to R. Sharma. Okay. So how much amount I paid? $25. And this $25 I will write in column for ledger accounts. Now next see the last transaction conducted on January 10. Sorry, not January 10, January 30. What is the transaction? Paid bus fare. So bus fare. And how much amount I paid? $30. And this $30 will come in column for traveling expenses. Now see, after recording all the small payments made in that particular month, what I will do? Now see, after recording this, what I will do? I will make total of this total column, total paid. I will make total to find out the total payment in the month of January, small payments. So this is the total. This is the total in the month of January. Total of small payment. And same thing I will do here also. I will make total of all these specific columns. I will make total of all these specific columns. $30. And what is the total here? $50. And again $50 total. and here the total will come $85, and here total will come $20. So like this I will make the total of this total column plus total of the specific column for small payments. Now I will compute the balance. For that first I will make the total of debit side. So the total of debit side is 500, isn't it? And the same total I will write here. Now from this total I will subtract this 235. So this much amount left, 264. This is the balance. And I will write here balance is carried back. On the last date I am computing this balance. So I will put the last date of the month, January 31st. So it means on the first day chief cashier gave $500 to the petty cashier, and out of that 500 he expended how much amount? 235, and this much amount left with him.